Yeah, Monday. What's up, everybody? Monday, April the 27th. We're kicking off a new week in the daily market commentary, the only way we know how, looking for potential breakouts and reversal trades from an educational perspective in our 12 futures markets. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. And if you don't mind, if you've been here a little bit, throw a like on the channel. Just hit that thumbs up button. That means a lot. So let's go ahead and dive in. Right now, the S&P is up 25 points, or a little less than 1%. The NASDAQ is up almost 100 points, a little over 1%. Crude oil and gold are both down a little bit. Real quick announcement, on Saturday morning this week, Saturday morning, May 2nd, we are going to start a trade review session. So this is free to anybody who wants to attend. Pro members, you can submit your trades for us to review, but free for anybody to attend. This is going to be a live session with three instructors, myself, Corey Lane, and Justin Krebs, so you can ask any questions you want of the three of us reviewing individual trades. So mark that on your calendar. You know, the thing that Justin says, he says, you know, you get better in the off season, and that's why we do this on a Saturday morning. We don't want to have to review our trades while the markets are open. Let's do it when the markets are closed. And so Saturday morning trade review session. Please feel free to join us. Go to tradersarmy.com/live online in order to join us. I will pin that link in the comment section below. All right, moving on. So on the ES, we are up about 25 points as we've seen a pretty strong overnight move. Now, we did fall from a supply level. I don't have it here because we took it off last night in our session. We did fall off of this nice little supply level, got a little bit of a move away, and had a couple of people that jumped in on that. Took a little bit of a move, but then we had to remove the level because we traded more than halfway into the zone. Remember that when you trade more than halfway into a zone, you then have to remove the level. We don't switch it to a confirmation. We just don't use it at all, and that's exactly what happened here. So the price came up, and we blew right through it. Now in the overnights, what we're seeing on our hourly chart, or excuse me, our 4-hour chart, is we have a bit more strength. We have a potential breakout area here at this 28.85, which is still fairly far away, so it's not all that close. So there's plenty of room if we get a pullback into one of these areas, possibly to get long. You've got, but none of these levels are super clean areas of demand. So I'd actually be also okay if somebody wanted to pick up a trade somewhere around here, looking for some potential basing on a breakout above the Globex high, because it's not like there's a big Globex trap. You know, a trap would be looking for a supply zone up here where we would get a reversal of just above the Globex high. If we get basing, I think you've got a reason to try to get long again up through there. All right, so moving over to the NQ in our NASDAQ position. Now, remember, the NASDAQ's a little bit stronger. So the NASDAQ actually has come into a potential supply area, and we've actually come into that in the overnight. Now, knowing our 6-candle rule, we hit it once, 1, 2, 3, 4, 5, and after 6 candles, price has gone essentially nowhere. So if you wound up taking this one in the overnight and you're still in the trade, there's nothing wrong with that. It's okay to still be in the trade. However, you should take your stop and move it to break even, since we haven't gotten much of a movement. However, I think that you're probably, whenever I see the 6-candle opportunities like this that chop along sideways, that typically sets up for a pretty decent breakout to the upside. So keep an eye on that as well for today. In crude oil, we're using the September contract to analyze, since there's a lot of brokerage firms that are not letting you trade the June and July contracts. I'm actually using the September. It's a quarterly contract. It seems like it has enough liquidity. And when I look at this, you know, we're down about almost 5% already in pre-market trading, where we gapped down last night. Now, for those of you that took this gap down as a gap and go trade, you've had a pretty good move off of that position, and price is continuing to move down. For those of you that took the gap and go trade, it's not a traditional gap and go because we didn't have much of a gap to really lean on, but that's what we've seen is the gap and go scenario. We did come into our 15-minute area of demand and getting a little bit of a rally off of there. Now, looking at that little bit of a rally, what I see actually is a better opportunity is for price to trade back up into this little wick over wick area of supply. If we get a little bit of momentum this morning, I think this is where I would look for another potential reversal right at 25. A whole round number, little tiny wick over wick. It's a very small area there. I got to really zoom in to see that wick over wick, but that's where I would look for today if we have price kind of continues to come up to that zone. In gold, so in gold last night, looking at gold, we had a potential area here on a breakdown if provided that we got some basing. I didn't get any super clear basing here. We just popped through it in the late overnights, but I do think that there's a chance we could see gold come down a bit today. And so, I'd still need the proper basing for a breakdown, but I don't have any quality supply to lean on per se. So I think that I'd need some quality basing for a breakdown and then a decent reversal opportunity down here. All right, moving over to our bonds and currencies. We did see some of those moves happen in the overnights as our bond market came down right to our demand level, and we got a nice little move away from that demand level, about 3-1, and it came right to its opposing fair price value area for supply. So we did finally see a little bit of movement in our bond trade coming to our zone. So if you caught that one, great. Leave me a comment down below. Always love to hear those. If you missed it, don't worry about it. You didn't miss a gigantic move. It was a very small level, but we've been unable to really hold it. So I think there's still a chance that price could come back down and break down below this region. Remember, this is the origin of that was this little wick over wick. So keeping that line in mind, that's where I would look for a potential breakdown if we happen to get it. In the Aussie last night, we took a look at the Aussie. Unfortunately, we had a breakout to the upside set up in the Aussie, and we did not get the basing that was required in front of the level for us to get long on that position, as it just popped right through. So in popping right through, now I'm going to look a bit lower for a potential reversal. Right here was about the origin of that breakout. I have this little 15-minute level down below, but I'm going to remove that 15-minute level because I like this one here a bit better that happened in the overnight. I'm going to leave it on there primarily because this 15-minute level is a better time of day than the overnight level. Now that I think about it, so in looking at this on the 4-hour time period, we are definitely in an upward trend. We looked like we were slowing down, but we picked up a bit additional momentum here to get us higher than this prior swing high. And so, looking at a pullback, you've got a couple of areas down here that might make decent pullbacks, but I think you're still better if you wanted to go on another breakout. So for those of you that caught the breakout, you got a nice little run. If you didn't, I think you got another spot up here. In the euro, so the euro, we looked at this area of supply up here last night as a potential wick over wick. I liked this level, still like this level. However, I don't like the fact that we're basing in front of the zone. So basing in front of the level is the kiss of death, all right? Kiss of death is basing before a level. And so I'm going to remove it at this point. I just don't want to take the risk if I'm basing in front of the zone. Next I've got all these areas of demand down here that could be potential reversals. This is not a great time of day. This is, in fact, one of the worst times of day to look for a level, but it could serve as a reversal only because it's a prior area here of support, resistance. It looks a little bit of a fair price value area in here for this setup. So I'm going to put it in there. I don't normally lean on those time of days, but it might be worth taking a look at. In the Canadian dollar, so our Canadian dollar, we rallied up into our supply level in the Canadian dollar last night. So we did come into that zone. 1, 2, 3, 4, 5, 6 candles later, we popped up right to where our stop loss would be, although it didn't hit the official stop, but it still told us, okay, we should probably be out of this trade. So that one, unfortunately, was a little stop out or a small loss relative to the reward that it was giving us. But keep an eye out for a potential breakout above this region up in here. So I'm going to leave everything alone in the Canadian dollar. Not a whole lot to add on this one. Our biggest mover last night, which was the best trade of the evening, was our level in the pound, as We had a breakout in class above this region here, and our breakout worked out brilliantly with a nice move away, wound up hitting target, and then came to our second breakout, and unfortunately we didn't get the basing for our second breakout. So now the second breakout, I think we still have another breakout potential above here if we get more basing. If we do not and we get a pullback, I'm going to look right here to this little area right there, which is probably a decent little time of day. There's a little bit of some wick overlap right in there. And then in our Japanese yen, we have finally broken above our Japanese yen area. If you caught that one, if you got a little bit of the basing, then great. You caught a little move. If you didn't catch that, look to a retrace, possibly to, that's already been tested, unfortunately, with this red candlestick down in here. Technically, I'm going to wrap my lines around this area here because that's my next closest area of demand. We're coming into nearly a supply zone, but I don't have a whole lot of clean areas in here to lean on. And in our 4 hour, we've still got a very tight range, so it's still fairly tight in there. Not a whole lot to do with this one. So looking at today, no matter what your bias is, if the market's telling you to stay a buyer, be a buyer. We do have a lot of earnings coming up this week, and the earnings that are coming up this week should give you a little bit of reason to pause and to think twice about some of the trades that you take. Remember, on Saturday morning, we're going to be reviewing trades, so don't forget to join us live Saturday morning, 8 a.m. Central Time for our live trade review. We look forward to having you join us in that. If you guys have any questions, as always, send us an email, support@tradersarmy.com, and I will talk to you soon. See you.